In fact, over the last few minutes itself, we've seen the sell-off intensify in the Indian equity markets. Currently, the Nifty 50 trading with cuts of as much as 1.5%. The Nifty Bank trading with cuts of more than 2.5%. And I think it's a fair moment to bring in our guests for today. We've got Kunal Bothra, who's joining us, as well as Vijay Chopra, who is MD and CEO of Enoch Ventures. I'm going to come to you first, Kunal. What are you seeing on the screen? Looks like key supports are getting broken as we speak over the last few minutes. What are the supports that you're looking at for the benchmark as well as the Nifty Bank? And what are the key stocks that you have for us today?
Good morning, Alex. Good morning, everyone. The market structure, I believe, over the last couple of days is getting back into the weaker side. Now, there are a couple of data points which are very, very intriguing. So I was looking at the charts for the Bank Nifty, and over the last 1 month, I think from February mid somewhere, the Bank Nifty has been taking support at 34,500 levels for 3 times. So this is the fourth attempt or the fourth test towards the support of 34,500. A consistent attempt towards breaking a particular support or a resistance generally yields the breakdown or breakout in that case, and it results into the asset class going into a trend specific. So I believe that the 34,500 level, which you've tested on Bank Nifty yet again, could be a very, very important level. Now, 2 other very important data points. One on the technical aspect is that the MACD as an indicator on the daily charts has for the first time turned negative or has gone below zero for levels for Bank Nifty. This has happened twice in the last 1 year. I think one was in May 2020 and the other was in September 2020. And on both the occasions, it's resulted into at least a 2,000 to 2,500 point correction on the Bank Nifty in a matter of 7-8 trading sessions. So what I'm trying to indicate is that the next couple of or the next 1 week odd for the Bank Nifty traders could be very, very crucial, because if the MACD remains below zero levels, there could be a chance of an incremental sell-off in the index. And the third and the most important data point is there was a huge amount of increase in the open interest for the Bank Nifty on Friday. So the Bank Nifty OI on a net basis came to be at as almost a 7-month or an 8-month high for the banking index. So all of those data points indicates that it could be tough time ahead for bulls, at least for the next few trading sessions or for the next 1 week odd. And chances of a sell-off below that 34,500 level could be far more higher. Now, in that aspect, I would suggest a couple of sell calls. First one, which I'm suggesting, is a sell on Bajaj Finance. The stock looking to be weak on terms of chart structure. Bajaj Finance and Bajaj Finserv both have started to show signs of correction. In fact, I believe that the stock is also on the verge of breaking some of its critical support levels. 5,200 is what I would place a target for Bajaj Finance. Would recommend a sell. Stop loss could be kept at 55, 25, 55, 30 zone. Would term this as a high risk trade. The second one which I'm suggesting is a sell on Axis Bank. Now the stock is forming a very similar pattern with respect to Bank Nifty. Those multiple attempts of support towards 720, 725 zone. I believe if this support gets taken out for Axis Bank, it could result into at least a 40 to 50 point correction from current levels. So sell on Axis Bank as well. Targets closer to 675 approximately, and stoppers could be kept at 740.
All right. In fact, Axis Bank, the worst performer on the benchmark today, down nearly 4%. Thanks, Kunal, for those ideas. I'm going to go across now to Vijay. Vijay, good morning to you. Thanks so much for joining us today. And just taking forward a little bit what Kunal was talking about, some of those key levels to watch, at least for the near term. But on the fundamentals, would you say that over the next couple of weeks, this chop and churn that we've seen, is it a great opportunity to start accumulating for the long term? And we started having conversations about value just perhaps a couple of weeks back. Does that still hold true?
Good morning. I think that there are a couple of things which are playing a spoil sport. One is inflation. So whenever inflation is sticky and on the higher side, we see a lot of selling happening on the banking and the financial stocks. So if at all we are not able to manage the inflation, the government target was 4%. We got a figure of 5.1, and it's going to inch up as summers approach, because the food inflation part, it goes out of bounds. So I think that inflation is going to be sticky for some time. That's one. Secondly, crude. Whenever we see an upside happening in crude oil, we are net importers of crude, and it's not good for Indian economy at these levels. That we see upside in crude. So unless crude softens a bit, I don't think that this problem is going to get over. It's not going to be very good for Indian economy. So both these factors are definitely going to impact the bank and the banks and the bank Nifty. So I also foresee some kind of a gap fill up which happened during the budget, when we saw markets suddenly spiking and there's a gap in Nifty around 14,300. So I think that is quite possible that we see that gap being filled up during these times. And yes, some kind of a correction, some kind of a rationalization was expected in the markets, because we were seeing a continuous top being made in the markets. And yes, I think this is going to make the markets healthy. As far as your value thing is concerned, yes, there is a lot of value still in good mid caps and good large caps also at in some of them. So I think that let's wait for this correction to get over, and then probably it would be a good time to get into some value stocks. So if you ask me, my picks for today is one is TCS, which is trading at around 390. I think that the stock has formed an intermediate bottom, and we might see an upside in this stock where it can go up to 3200, 3220 levels. My second recommendation would be a company called Carborundum Universal. It's into the carbon business, and it's a very strong Murugappa Group company. So today also it is trading about 3% higher. So trading at 516 as of now. I would recommend a target of 550 on Carborundum Universal. And both of these are delivery buys. So just hold on to the horses. And I think that there is money to be made in these two companies.
Okay, thanks for your ideas as well. Let's quickly pull up MTAR Technologies move as well, just to get a sense of where it's perched at right now. 1091, up almost 4%. And do remember, they saw a stellar listing this morning. The scrip got listed at 1063.9, up an 85% premium over its issue price of 575 rupees. It is essentially a defense equipment maker, which is trading at over 85% higher than its issue, 90% actually now, if we factor in the up move since listing as well. It was subscribed just over 200x, beating Mrs. Vector to become the most successful IPO in more than 3 years. So there you have it, a quick update on MTAR Technologies. Time to slip into a break. Before that, a quick programming reminder. India Economic Conclave has always set the stage for driving India's economic agenda. We're back again to focus on India's outlook and vision for the new decade and its aspirations for a new India. Our theme this year, India's Decade, Reform, Perform and Transform, will feature the biggest voices from policy, global markets, economy and corporate world. Catch all the action here on Times Network.
Welcome back. You're watching Buy Now, Sell Now, and as we speak, that selling intensity that we spoke about at the start of this program has actually been building. The Nifty Bank has actually broken down. In fact, it's trading very close to the level that Kunal mentioned at the start of the show, that is 34,500. But at this point, let's go straight to the viewer queries. We've got one coming in from Peter Richards. He's got a question on two stocks that he has acquired. He's planning to, he's planning to invest in two stocks. It's IRCTC and SBI Cards, and he's got a corpus of 2 lakh that he wants to invest into these two counters, and he's got a time frame of 2 years, so it's quite long. I'll go across to Vijay on this one, since it's a long-term query. On the fundamentals, do you think that these two counters would be good to accumulate at this point?
Alex, I think that both these companies are good companies to have in a portfolio. Both are portfolio stocks. But yes, we have seen a correction which is getting started, and probably it might, accelerate further a bit. I think IRCTC would be a good buy any time below 1900. If you get it between 1850 and 1900, it's a good buy there. And just keep on holding. We haven't seen the Indian Railways working full steam as of now. And once we see that, probably this stock can go up to 2500, 2600 as well. So I'm fairly bullish on IRCTC because their revenues are quite consistent. and their biggest customer, Indian Railways, is they need not search for clients or revenues. It is a perpetual game, and the recoveries and are very fairly fast. So one can buy around 1850 to 900. The other stock which he mentioned is SBI Cards. Again, it is the only credit card company which is being listed in the country, and great backing by SBI as well. And I think that as the digital India drive, it increases, and we have seen a decent increase even during the COVID times that people have started spending through plastic. So the credit card business should grow leaps and bounds. So if you get the stock anywhere between 950 to 1000, it would be a great buy for a portfolio. Just keep on hanging around with these companies, and they are going to give great returns over a period of time. So good choices, but wait for these levels to come.
Okay, all right. Moving on then to query number 2. Vishal Sunavani has written to us. He bought ONGC at a level of 119 and wants our experts' advice on the future call of action. Kunal, the stock has bounced quite a bit from January lows of 88, 87 odd rupees, but the viewer is still short of about 5 rupees from the levels he dipped in. So what would be your advice at this juncture?
Well, I think if it's a short-term trade, then I would advise an exit on ONGC, because a couple of important indicators have turned a bit, I would say, negative for the stock. First of all is the MACD. I think on the daily charts, you're seeing a bearish crossover already happening for the stock at current levels. So I think that generally indicates that the stock could probably go through a corrective phase. The correction could be a 5% to a 7-8% kind of a correction. So which is why I think the idea over is that if it's a short-term oriented trade, and if you're looking out for this trade as just a pure a technical play or a trading play, then I believe 114 should be a good enough support level, and the stock breaches that support zone, and it's very, very close towards doing that. I think it could trigger into one more round of correction on ONGC. And on the other hand, I think even in the last few days, Karnya, the volumes for ONGC had been dropping by, so the stock was moving up higher. It was unable to break past about that 120 hurdle. So 120, 119, where the viewer has bought, apparently is now a resistance zone for ONGC. So till the time the evidence is not clear enough that the stock is breaking past about the resistance, I believe it's prudent enough to try and have a stop loss towards this trade. I would recommend 114, and a closing below 114 level should be a good enough stop loss for the trade on ONGC.
Okay, so if it's a short-term bet, better to stay away from this one. What is your view, Vijay? ONGC, we don't have the exact time horizon, but over the medium to long term, how does it look to you?
I think it can go up to 150, 160. The stock has shown resilience, and from the bottom it has risen quite nicely. And with the crude prices going up, I think ONGC should benefit. And my sense is that this stock can definitely go up to 150 and then 160. But yes, a part profit booking is recommended around 150. So definitely not for the traders, because we might see some downside happening. But fundamentally, the company is very strong, cash-rich, dividend-paying company. So can hold for some time, and I think that 150 is definitely on the cards.
All right, let's go to the next one. We've got Annamalai K, who's written in saying that he's got 100 shares of Bharat Electronics that he says that he bought at 168 per share, and he's asking whether he should hold or sell. Kunal, I'm not too sure about that buy price. It seems to be quite high, but so it's definitely very close to the peak, if you can call it that. What advice would you give him at this point? The stock is down about 2.6% in trade today as well.
So it seems that if the buy price is at 160 plus levels, Alex, I think that this is an investment since last 3 years, 4 years back, dated last 3-4 years back. I think it was in 2017 or 2018 start that the stock was trading at this 150, 180 band. So I think in that aspect, it should be a previous holding for the viewer. Now looking at the charts for BEL, I think it's a very classical chart, because on the medium term to long term, there have been very strong indications of breakouts for BEL, patterns of inverse head and shoulder more on the longer term time scale, and those breakouts have led the stock to a rally on the medium term as well. So I believe from those 100-120 levels, the stock has gone into a zone where now 120 is acting as a support, and closer to 145-150 is acting as a resistance or a sort of a ceiling for the stock price in the near term. So it's trying to shift to a range on the upside. I believe as an ideal strategy, I would advise that the viewers should look to average further on the downside. I think closer to 120, which is the previous or which is a very important support now. I think that should be a good enough level for you to average out further and try to bring your cost price lower. So I think if you stay invested, say for the next 1.5 odd year, there are more higher chances that the stock can complete this corrective wave and restart a long-term uptrend for itself. So I would say buy on dips, specifically towards 120 levels for BEL.
Okay, let me also take a fundamental view on this. Vijay, coming to you on this one, a lot of interest, a lot of optimism on some of those defense counters, and this is no different. You have BEL that rode the wave, so to speak, in the recent past also of that interest in defense stocks. Would you say that this is a counter that you should definitely hold in your portfolio? We've got Annamalai who's holding 100 shares. Like Kunal suggested, would you also recommend buying on dips?
Well, Alex, I think that I mentioned this earlier as well, that 2021-22 are going to be the years of government companies. And I think that all the good government of India companies, which are well managed, they are going to show a decent upside. BEL already has shown that. Secondly, our Prime Minister, Mr. Modi, wants India to be a defense manufacturing hub, with a 5 billion export in defense. How will it happen without BEL? BEL is one of the major suppliers of missiles and a lot of other defense equipments, which is sourced by the Indian Army and all the three defense organizations in our country and even outside India. And they have supplied to countries like Azerbaijan and other countries in the Middle East, and there's a huge order book which is coming up. So I think that these stocks should be held on to with a longer term perspective. It's not about a year or so, but maybe with a 2 to 3 year perspective. I think BEL has all the potential of going beyond 200, 250. Just keep on hanging around, and buying on dips should be the strategy. So I see a lot of value in companies like BEL. And this should unlock over a period of time, and the government is doing a very strategic decision that they want India to be a defense manufacturing hub. They have got the technology, they have got the scientists, and look at what has happened to a stock like HAL. So we have seen a decent upside in Hindustan Aeronautics as well. So I think that just keep on holding to defense stocks, especially Government of India stocks. There's a lot of value in unlocking we'll see over a period.
All right. Okay, the last and final query of the day. Hari Varijakshan writes to us from Abu Dhabi. He's bought 10 shares of Tasty Bites at a price point of 12,000, asking whether he should continue to stay put or buy more perhaps on dips. Kunal, clearly he's made a good amount of money here on his investment in Tasty Bites. From 11,000 odd rupees, 11,700 levels, it is now at 14,200 just in a matter of 4 to 5 weeks. At this juncture, after having earned a decent profit, what would be your advice?
So I think my advice would be to try and take part profits over here, assuming if it's a trading investment or a trading based call which you had taken, and I think sitting at a profit of more than 2,000, 2,400 kind of points on the stock should be a good enough reward for a short term. Because then what happens actually is that if there is a correction in the market, assumingly, and if the stock goes into a corrective phase yet again, then the next level of support, or the first major support rather, for the stock would be back at that 12,000 level. So I think it could be back at your cost price if there is any further correction in the markets, in the overall markets, which could probably lead to a correction in Tasty Bites as well. So I think as a trading play, I would advise that you can book profits over here and then wait for the stock to come back to that 12,000-ish kind of levels. I think that could be a re-entry level or a good re-entry level for you yet again, assumingly if you are looking at it from pure trading play.
Okay, all right. Vijay, do you concur with Kunal's view?
Well, I think that if he has made this kind of money, so he should definitely book the entire profit. my sense is that if you get into a more fundamentally strong company in the FMCG space like Nestle, which is much more diversified, and it's also in the food-related industry, and it's a global behemoth. So I would say that it has a much more bigger canvas to work on rather than Tasty Bite, which is a much smaller company. So you already have the profit. Just book it and buy Nestle at these levels. I think that Nestle has the potential of going to even 20,000, 21,000. So again, a great company, portfolio company. So exit and get into Nestle.
Okay, well, there you have it, the view on Tasty Bites as well. Thank you so much, gentlemen, for joining in and sharing with us your view on the markets and helping our viewers out as always.